Steve, I think you made some news and shook up the world a little bit when you were in Davos, and you talked about making AIG, rebuilding, I should say, into a global life insurance business. And I think at this point, everybody still thinks, wait a minute, aren't you supposed to be divesting? Aren't you supposed to be paring back? How serious are you, and how quickly are you thinking about doing that?
We are very serious, but our first priority is to pay off the taxpayers, the U.S. government, and to ensure that when we pay them off, you do better than break even and come back with a profit. That's our overarching goal. But instead of trying to get there by selling off all the furniture, instead, we are going to continue to build a yet better, stronger company every year. And part of that strategy now coming into focus is that we will probably do acquisitions to make a stronger company. And somewhere in the next year or 2 or 3, I don't know how long it's going to take, the stock price will become sufficiently attractive that the U.S. Treasury will monetize its interest and the taxpayers will be out and done. So what's changed is that we're no longer in liquidation mode. We are now in growth mode as the way of creating the best value for the taxpayers who own 70% of the company.
So the $182 billion bailout, you have no doubt that that will be completely paid and that maybe even taxpayers are going to make some money on that.
It used to be very complicated. Now it's very simple. We have paid back enough that only thing is left is the taxpayers' stockholding interest. And if that is sold at $28 or more,
which is about 4 or 5, I think, from where you guys are today.
It's only a few dollars above where we are today. If once it's monetized, then when you add up the entire $180 billion of cash and backup support that we got, the taxpayers will have gotten out better than whole.
What was interesting about Davos is I think you guys also talked about taking maybe a bigger stake in a spun-off subsidiary, and that is AIA Group. I mean, what's your plans for that? And how quickly might you move on that?
Well, I tried to say in that interview that it's premature to talk about specifically what we might do. Here's where we are. We have a totally global property and casualty insurance business. We have a life insurance business that's largely confined to the U.S. And the question is, shouldn't we become global on both sides?
Right.
And it is a strategic question. And then within that strategic question is whether the best way to get there would be to start with other startup companies or buy some other life companies in other parts of the globe, or make an approach to reacquire the shares that we spun off into the Hong Kong Stock Exchange a year ago in this company, great company called AIA, which is huge in China and in many other countries in Asia.
A company you know already.
It's a company we know already. We used to own it, and we still own a piece of it. We own a third of it now. Mm-hmm. And we're not ready with a decision. It's a strategy question we'll have to be facing over the next couple of years. And when the timing is right, we will make the decision to either get out completely or to get back in on AIA. And I thought that was, the only thing unusual about that statement was not that we're plotting an attack on AIA right now. The stock market in Hong Kong went crazy when I made those remarks, and I apologize for that. But the real startling point is, here is AIG, the company you thought was going to roll over and die in a liquidation, instead is now thinking very aggressively about its global future.
But I do think it's interesting that you did talk about AIA, and I think that's why the markets went crazy, that you kind of singled it out. It was something you owned. You spun off 2/3 of it. Is it 50-50? You say it's strategy, but is it a 50-50 chance that you would bring it back into the fold completely? Or again, it's nothing that's going to happen in the next 6 to 12 months, or nothing that's going to happen in the next 2 years? It
is too much a function of what happens to the market for insurance stocks, for Asian stocks, and so on. The good news is AIA is in some wonderful growth markets. It's doing very well, and therefore its stock is very highly priced. It may not be the most economically efficient way for AIG to get back into the global life business. But this is something we'll be closely watching over the next couple of years.
So it could go either way. You could possibly build your stake in there, or you could sell it. It's hard to say which way it would go.
That's true, and it's not a decision coming up, this week or this month or anything like that. This, I was just saying, as a down-the-road strategy for where does AIG go next, this is one of the things that we're going to have to confront and decide, and we will decide it, a year or two from now, depending on what the market conditions are.
Speaking of market conditions, your plane leasing unit, what are the plans for that ILFC? Is the market stabilized enough to go proceed with that share offering in your view?
This is ILFC. It's a aircraft leasing company. It owns 1,000 commercial jets out leased to airlines all over the globe. It's a successful company. It is profitable. It is self-financing. We don't have to put any money into it. In fact, we're getting money out of it. But it is not core to our business. It doesn't fit well with an insurance company, and at some point we will monetize it. That could either be maybe somebody comes along and makes us an offer to buy it.
Has anybody yet?
No. I don't know if they have or they haven't, but nobody has made us an offer that we think is economically sensible for us. And we have therefore prepared to go to an IPO in order to put it out into the public market and as a standalone company. And we've made all those preparations. The market is still a little depressed for aircraft leasing entities. We think that will come back as we demonstrate the incredible earning power of this business.
So in terms of a timeline, Steve, can you, in the next 6 to 12 months, because the market's been certainly tough for IPOs, I'm just curious if you guys have any kind of a timeline.
Well, one of the things that was talked about over in Davos in general about IPOs is that at long last, this may be the time when IPOs, start happening again, that the market conditions are improving enough that we may see a lot of IPOs, and we are hopeful that within a year that the market conditions will be right to do an IPO with ILFC. One
other big thing, AIG's share buyback. I'm curious if you guys have been buying it. You announced, I think, $1 billion share buyback. Have you guys been buying back stock? I think you announced it in November.
Again, one more time, a huge signal of the change at AIG. Most fundamentally, it says, we've stopped playing defense, we're back playing offense. And one of the things, we have high confidence in the future of this company, and we're willing to put our money where our mouth is and talk about repurchasing of shares. We don't report it on a day-to-day basis, but on each quarter's earnings announcement and financial results, we will be showing exactly how many shares we bought and for how much in each period.
So you don't want to share with what you've been doing so far in terms of the buyback. I mean, have you been buying since November?
We will be displaying that when we later this month when we release our financial statement.
Let me ask you, because your stock is doing okay this year. It's up about 8%, down about 30% though over the past year. That share buyback to kind of shore up the stock a little bit, give something back to investors. And I'm curious if you might increase that $1 billion. I know you just announced it in November, but might you do more?
The purpose of the share repurchase, we think it is a good thing when you have the opportunity to buy stock in your company at roughly half of book value. We think it's will be helpful to the current shareholders. We're not doing it to try and influence the stock price itself. We just happen to think it is a good investment for our own shareholders to buy back shares at the current price levels.
One last question I want to ask you, Steve, and that has to do with the bailout, and then compensations had to be approved by the special paymaster. You guys still have to live by that, and if so, is that hindering in any way your search for top executives at AIG?
That's a great question. As you know, we had a lot of discussion that was noisy in the press a couple of years ago when the pay rules were first imposed on AIG. And we had a lot of discussion because we were very concerned about losing good people. Part of what we had to do was cut the cash compensation way down and instead pay people with restricted stock. Nobody knew where the stock was going. Now the stock appears to be doing very well. It appears to have upside potential. And most importantly, though, this is a company that's got tremendous momentum. We will still have to abide by the paymaster's rules until the last share held by United States Treasury is sold. But we've learned to live with it, and in fact, we have found people who like the tremendous entrepreneurial spirit going on there under Bob Benmosche, and so we will live with it, and we will look again at our programs once Treasury is out. So
does that mean, though, is it limiting at all? Do you find that it's constraining you guys in terms of finding the talent that you really want, or you feel like you're attracting and getting the people you want to run AIG and take it forward?
We were very worried about whether we would be able to attract people at the beginning because it looked like we were in liquidation. That's going back to '09 when I first came on the board. Today, this AIG is so exciting that we are having no trouble hiring the people we want.
Now this is my last question. You guys did post a loss, though, back in November. What's the outlook for the company financially? The bottom line here over the next 6 to 12 months? Still a lot of uncertainties out there.
There are still a lot of uncertainties, but the underlying earning power of the company is very strong. One of the things that did happen in that third quarter that was kind of unusual is that each quarter we have to mark to market the value of our holdings in AIA. We have no control over it, but if the Hong Kong Stock Exchange for insurance companies goes down, it gets booked as a loss to us, even though there's no economic or cash flow impact from that. So there's a lot of things going on, a lot of what I call noise in the system in our accounted results.
But it's reality in a part of the
It's reality, and as I say, if AIA goes down, it becomes more likely that someday we may buy in those shares. And at other times when the stock of AIA goes up, then there's a profit that gets reported that also is really what you'd call at least a non-cash change in the financial results. So what I think is that if people look behind some of these extraneous numbers at the day-to-day progress of the underlying insurance business, they will see this company is getting stronger every day.
Thank you very much. Steve Miller, thank you.
Thank you.